Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, the ASX200 was up around 7.5% last year, and Jason McIntosh from Motion Trader observes a potential consolidation phase in the index. He notes that it faces pressure with a steep decline since December and suggests it may enter a larger trading range.
At this stage, the overall structure remains bullish. And this continues to be an upward trend until there's a clear breakdown. But the trend is coming under some pressure. So just unpacking what we have at the right-hand corner of the chart, we've got a steep decline from the December high. That broke below the November low. And what that did, that ended the sequence that we had of rising lows. Now, that in itself doesn't signal a trend change, but it is a sign that the buyers are less enthusiastic about stepping up and buying the dip. Now we've got this rebound. So far, it's struggling a bit to get a foothold. We saw that selling on Friday and Monday. That sell-off, that two-day sell-off erased 5 days of gain. So it's a setting where investors are quick to sell. I think this week's low is firming up as a key level. If the ASX200 falls back below there, then the chart structure weakens further, and then we start looking at the December low. One of the possibilities I'm thinking about is that the ASX200 is in the early stages of establishing a larger trading range between the December high and the December low. Now, if we just remember what happened back in April, so see those blue converging trend lines in the middle of the chart. We had a high in April, prices sold off, had a rebound, but then it was another 2 months before the ASX200 made a new high. Of course, this price action is going to have its own unique style, but I think some sort of similar trading range is a real possibility as we go into the first couple of months of the year.
Well, for a closer look at a couple of stocks with potential upside, Michael Gable from Fairmont Equities first considers sleep treatments company ResMed, which he says has had a breakout after consolidating for the past several weeks.
Look, ResMed has been a bit, it's not the smoothest of trends, but it has been heading higher since those sell-offs that we saw towards the end of 2023. What we've noticed is the share price peaked in October and then traded sideways for a while, and the range started to tighten up. So I've indicated that with a blue line. So it's showing us that there was pretty good buying support every time it dipped near $36. As I said, the range was tightening up, and then last Friday, and that's what I've circled at the top right, it broke out of this tightening range. So it should now continue on with its uptrend. So I think this is a buying opportunity for ResMed, and I think from here you'll see it push to new highs.
Michael's next stock in focus is Pro Medicus, with the healthcare imaging software company often talked about as the most expensive stock out there.
Again, we had a situation where it did overextend itself, I think, across sort of November, early December, and the two ways you can resolve that is either by selling off sharply or by just trading sideways for a while and just consolidate that move, use up a bit of time. So what's happening in this consolidation over the past few weeks is that because Pro Medicus has run up pretty hard, you've had obviously some sellers step in, but they're equally being met by buying as well. So that's why the share price can't get pushed a lot lower than where it is. And the line here is, again, the 50-day moving average, which I think is a good sort of filter for PME. It's allowed that line to catch up to the price now, and again, I think that current levels look like a buying opportunity, and I think it's going to try to push to a new high again.
And that's it for this week's edition of The Charts to Watch. Join us for more technical talk next week. Happy trading.